Lehman Brothers failed in 2008 due to a few senior executives who were a little bit too greedy. This is one of the largest banks in America that filed for bankruptcy. Because of this, people stopped having faith in the nation's financial system. Institutions were crumbling on a monthly basis, and bank runs were occurring every week. The financial crisis was the worst the country has ever seen since 1929. We were on the verge of a full financial catastrophe when the epidemic spread to every country in the world, suffering the entire global population. Without the Fed's $700 billion market injection, the modern economy as we know it may have collapsed in 2008. Now, a comparable event is taking place all over the world. Like Henan, which is a province in China, local banks have made it impossible for citizens to withdraw their savings, so they are protesting by lying in the middle of the road. Approximately $4.5 billion, or 30 billion yuan, are allegedly missing from banks in the most populous province in China, according to protesters. This has already begun to have an impact. As you can see in this video from Shanghai, the banking system in China as a whole is losing support from the populace. Many feel that in 2022, if the CCP doesn't handle the crisis correctly, it might spread the worldwide economy and put even more pressure on the already vulnerable world economy. Hey, welcome to Stock Market Mate. Today we'll talk about what exactly happened to the billions of dollars stolen from banks that might lead to China's financial crisis. Before we get into it, subscribe to the channel and hit the notification bell to help us beat the YouTube algorithm. If you're done with that, then let's get right into it. Where did the $4.5 billion go? People in the streets of Henan, China are protesting the theft of almost $4.5 billion in bank deposits by bank investors. However, in order for us to comprehend where these $4.5 billion went, we must understand how Chinese regional banks operate. Local banks are expected to only provide services to the local population, much like credit unions do here in the United States. In contrast to credit unions, restrictions are in place to prevent local banks from expanding outside of the region since rapid growth is problematic, particularly in the banking industry. For China's rural banks, the Chinese government has established a distinct role. They must concentrate on meeting the financial requirements of countries in rural areas, especially small businesses and farmers. More than 40% of the 1.3 billion people population in China lives in these rural areas. President Xi Jinping must therefore ensure that laws are in place to safeguard the population's rural sector. However, these remote areas are served by about 4,000 independent banks. Nearly all of them are highly vulnerable to regional economic instability. Growing outside of the neighborhood was one strategy to combat this reliance on local economies. So these nearby banks discovered a way to bypass the legislation. The law said that local banks could not operate outside of their community, so rather than leaving, they chose to promote online and draw in new clients while remaining in their community. In China, where the CCP controls the law, this wasn't truly a loophole. However, no one really appeared to enforce the law, so banks were given a green light to do a number of things that were unconstitutional. Offering relatively high interest rates was one of the main ways that neighborhood banks were able to draw in their new deposits. Depositors had been guaranteed a dividend of more than 4%, which, as we are certain, doesn't sound like enough, as many Wall Street bet members would agree. However, 4% is fairly high when you take into account that this yield is almost risk-free. REIT deposits increased dramatically at these neighborhood banks. However, as they say, more money equals more problems. What happens when banks grow too fast? One significant issue with such rapid growth is that banks must find a means to earn on those deposits in order to be able to pay the 4% back and presumably keep part of their gains. Unfortunately, even in China, there aren't many methods to earn more than 4% without taking on lots of risks. Regulators are now investigating this as of now. However, we are confident that the majority of you have already watched this movie, which is about a corporation that offered absurdly high yields in 2008 to draw in investors. The only way to achieve that yield is to either assume a great deal of risk or pull a Bernie Madoff and play your existing clients with the money from new ones. Let's presume these banks aren't pulling a Bernie Madoff and give them the benefit of the doubt. That would imply that banks were making highly hazardous loans to borrowers with poor credit in order to generate a 4% yield. Therefore, CCP's zero-COVID policy contributed to the skyrocketing default rates on these loans when COVID took effect in 2020. On the other hand, people began withdrawing money from their savings to pay for essentials as a result of the stagnant economy. Regulators could not predict the issues that might arise. They have often issued warnings on the risky business practices of these banks, but enforcement was still sluggish. This delayed enforcement was largely attributed to corruption. Many government officials benefited directly from the bank's risky business activities. But when the second COVID wave hit China, things really became worse. 4 regional banks in Henan stopped accepting withdrawals in April 2022. People were unable to access bank call centers, websites, or applications. It would repeatedly inform them that the card had failed when they attempted to withdraw cash. Customers had their working money for enterprises, student funds, and life savings cut off overnight. Money is still out of reach now, more than 3 months later, and the possibility of recovering it is shrinking daily. Over 400,000 consumers are affected, and 4 local banks are holding on to more than $180 million, claims One Data. Chinese citizens made the decision to plan a protest in response to the predicament and the authorities' lack of competence. When CCP learned of this, most protesters discovered that their health codes had changed to red on the day of the protest. In present China, where freedom of movement is rigorously regulated by a color code system set by the government to restrict the spread of the virus, a red health code is akin to being locked up. The majority of the protesters' COVID-negative status was the sole problem. Therefore, this was just the government's attempt to suppress the news of a bank run. Since the foundation of the contemporary financial system is trust, the CCP did not want the news to spread to other provinces, but it still did. A video showing a long wait at one of China's biggest state-owned banks, ICBC, that was released on Tuesday, June 9th on Twitter gives the impression that there is a spreading epidemic. The tweet's English translation states, "These people are coming to unlock the bank card system because it is locked. Big runs are on the way." The recent days in Shanghai have seen significant problems with cash withdrawals from banks, according to blogger Jennifer Zhang. Uncertainty is undoubtedly made worse by the possibility of additional lockdown as COVID instances once more increase. All Shanghai banks have put restrictions on depositors' ability to withdraw cash. "China is about to have a bank run," she said. "It surprises me that there hasn't been more coverage of the obvious warning indicators of a bank run in China." According to Yufang Liu of HSBC China, the emergence of China as a major economic force has raised fears that a crisis in Chinese banking may trigger a comparable global recession to the one that accompanied the global financial crisis. The government's investigation into the Henan bank run is being eagerly watched by investors. You can understand why this has the potential to become nuclear, in terms of money of course, when you combine this with the Evergrande and China's real estate problem. The enormous real estate market in China, which contributes to up to 30% of its GDP, is experiencing a deteriorating crisis. Nearly 30% of the outstanding loans with Chinese financial institutions are for real estate. One of the largest developers in the nation, Evergrande, is undertaking a significant reorganization after making a late-year loan default. Although a lot of experts think China's financial sector was mostly insulated from the Evergrande crisis, flaws are starting to show. Additionally, if the bank run worsens, a black swan event much bigger than the Evergrande might hit the already unstable global markets. Talk about misplaced trust. The system would crumble, but the word still got out. The risk is enormous. Well, that's about it for today. If you found this video helpful, kindly click the like and subscribe button. Hit that notification bell to get our latest updates. Also, you might want to leave a comment below. We love hearing from you. Thank you for watching, and we'll see you in the next video. If you enjoyed this video, you're going to want to watch one of these 2 videos right here. Enjoy!